Hi, everyone. Today, let's talk about Jerome Powell's testimony. Then we'll go over the Fed futures. Then we'll go over the charts. And then we'll take a look at my results for the day and my positions going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Jerome Powell came out and spoke to the Senate, and he said some stuff, and the markets didn't like it. That's the broad overview. He said we are continuing to fight inflation. We're going to keep the course. We're going to continue until the job is done. Lots of things that we have heard before. But right here is the key highlight. He said if the data indicates we're going to tighten faster, potentially, and so far the market thinks the data is there to recommend a 50 basis point hike at the next meeting, which is definitely not what the market was pricing in going into this speech. He mentioned that inflation has reversed the deceleration seen late in 2022, and he also mentioned that the economic data has been coming in stronger than expected, so the market is resilient. Inflation is also resilient, which both point to higher rates for longer. He said the peak or the terminal rate could potentially be higher than previously indicated at the last meeting, so we should expect the terminal rate based on their graph to go up at the March meeting, once again becoming a stronger headwind for the markets. Treasuries sold off pretty strongly based on his comments, and the possibility of a 50 basis point hike at the March meeting on the 21st and 22nd. And of course, markets did everything that he wanted them to do based on how hawkish his comments were. He continues to reinforce the 2% inflation narrative, and that they have covered a lot of ground and that some of their metrics are lagging, so they are keeping that in mind. And there were certainly some senators like Elizabeth Warren saying that we are going to put people out of jobs in order to calm inflation. And basically he said, yes, that's what we have to do. However, the job market has been extremely resilient and we haven't seen signs of that yet. Moving over to the Fed futures, you can see huge switch here today after the announcements. You can see the probability yesterday was 71.6% for a 25 basis point hike. That has dropped all the way down to 28.8% and basically flip-flopped with the 50 basis point hike here on March 22nd. So basically, the market is now pricing in that 50 basis point hike, and that's most likely what we're going to get in March. Moving over to the May futures here, you can see it's still hovering at that 25 basis point hike. That's most likely what we're going to get. And that is assuming that we do get the 50 basis points at the previous meeting. You can see how those probabilities had changed. Previously, the rate was expected to be between 5 and 5.25. The probability was 60%. You can see that has now dropped to 20%. And now the most likely case is that we get 25 basis points in May at almost 62%. Looking at June, you can see 25 basis points is still the expectation. Then going all the way out to July, the probabilities still point to a pause in July, but this percentage has actually increased from the previous day. You can see 37% yesterday to 47% now. Overall, it looks like we're getting faster hikes, but the same amount of hikes based on the 50 basis points here in March. Moving over to the charts here, they did basically exactly what we thought they were going to. I thought we would get a little bit of a rally before his comments, and we did just a little bit here in the pre-market. The NASDAQ was a little bit more resilient early in the session, but very quickly after his statements were released and the hearing started, the market sold off extremely fast, got all the way down here to 397.70 at the low of day. Did find a little bit of buyers here at the end of the session. You can see we did tag that support line that we had been watching. Looking at the hourly chart here, you can see we're right in that zone. Lots of volume in the zone as well. Strong level of support, so that's interesting. Certainly get a little bit of a bounce tomorrow. We shouldn't expect his comments tomorrow to be as impactful. I think he's probably said everything that he's going to say, pending a few extra questions from the House. But right now, the market is pricing in that potential for some economic weakness. And you can see here, actually going back to Thursday, that gap that we had from Thursday to Friday, we did just barely fill that, which does give us the ability to potentially find a little bit of a bounce up to that 401 level tomorrow. Certainly possible. There is a little bit of bullish momentum here on the 15-minute chart at the end of day. Same on the hourly, stepping into bullish territory. High volume at the end of day as well. And looking at the hourly chart here, you can see we're getting pretty close to that lower trend line that we respect multiple times here. If it's going to bounce, you would want it to bounce quickly. Could maybe come all the way down and tag this level, overthrow it slightly down at 396. 390, 396.80, somewhere in this zone if it's going to overthrow it, and then get a bigger bounce back up to this previous trend line around 403, 404. That would be interesting. Definitely respect the 200 SMA here on the hourly chart. But like I said, does seem like we found a little bit of a base here at the end of the session. Moving over here to the NASDAQ, similar thesis. You can see that little bit of a rally we had early in the session after a slight gap up, and then we sold off really dramatically, tagging that 200 SMA here on the 15-minute chart, correlating with the 55 EMA here on the hourly. Similar thesis, slight bullishness at the end of session, slight step down here on the hourly MACD. Hourly RSI showing weakness still. 15-minute RSI could look to bounce. Like I said before, might find rejection here in the middle of this down move. Have lots of volume here at 297.70, 298 in this previous zone. Even on the hourly chart here, you can see lots of volume done at this previous level. Does correlate with the highs going back to 23 February. So very strong level. Certainly could bounce from here. And like I said, that is what I'm looking for. You also have the hourly VWAP sitting at that same exact level. Seems like a great spot to come back up, retest, potentially find rejection, and continue down to this next trend line. And that seems like the most likely thesis. Looking at the gap, did not quite fill the gap here. NASDAQ looked quite a bit stronger than the S&Ps, which is interesting. And keep that in mind in your trading going into tomorrow's session. Moving over to the Russell and the Dow here on the hourly chart. Russell looked very weak, testing these previous lows from this previous consolidation zone. Does look like we found a little bit of support there to oversold conditions here on the hourly chart. Similar thesis would look for it to bounce off of these previous lows back into the consolidation zone around 288.65. Momentum points to that being a possibility as well. Dow looking very weak also, filled the gap back into this previous consolidation zone as well. You can see it's testing that area of high volume at 329. Finished just below it here, which is interesting. And zooming out here, you can see looking for a potential bounce into this next higher volume at 331.70, 332 back in this previous zone. That would be interesting. And that would establish a slightly higher low here and potentially establish the grounds for a new higher high. That would certainly be interesting across all of the major indices, honestly. Moving over to Apple and Tesla. I'm surprised how strong Apple is holding up here. Did not fill the gap, just barely. Probably will fill the gap tomorrow. The close here yesterday was 151.08, and you can see the low today was 151.14, so just barely missed the gap fill. I would expect that to fill tomorrow, probably come down and retest this level at least down at 150.75, 150.80 in this zone. If that breaks, then we're looking at the next level of support down at 148.25. Pretty big downside potential, but it was a pretty strong run here recently as well. On the 4-hour chart, momentum looks weak, RSI looks weak. Looking at the hourly chart just for a moment, RSI still looks weak, but momentum is stepping down here just slightly, and you can see a pretty decent high volume level here right at the trend line that we were talking about. Moving over to Tesla, as we suspected, it broke through that recent support level at 193.50. Looking at the 144 EMA as the next level of support down here at 181. Makes sense that we would come into that zone tomorrow. It also correlates with the high here going back to Friday the 27th, sitting at 180.30. So right in this zone makes sense. You can see low volume through here, high volume right at this next zone, probably where we would see a bounce. And I would expect it to move fairly quickly through this next zone until we find support, like I said, right around that 180.50 zone. Looking at the indicators, MACD looks weak, RSI looks weak, not oversold yet. Basically everything points to bearish here on Tesla. Moving over to Alphabet and Amazon here for just a moment. You can see Alphabet did come off of this most recent 144 EMA here on the 4-hour, but we're sitting on that 200 SMA here. Could certainly see this break and come down to about 90.70. That would be interesting. We're down at this previous trend line, find some support and bounce from there back into this previous zone. Amazon continues to hold pretty steady here, did have a breakdown, did find a rally, did find a top, back into consolidation, pretty interesting. RSI points to some bullishness, MACD points to some weakness, and no clear direction overall on Amazon quite yet. It's worth noting that if it does break down from here, you can see how little the volume is until we get down to like 85 or 86. If we do zoom out a little bit here to include some previous price action, there's a bit of a bounce, maybe around 80.50, 88.50, that would be interesting. But otherwise, like I said, solid support would be back down here around that 85 zone and the previous low. Moving over to transports here, similar thesis. We had that kind of double top, continuing to slide back into this previous consolidation. If we do get through here, then we're looking back down at this next low. Huge gap, obviously, between those two levels. 200 SMA and 144 EMA here on the 4-hour chart sitting in that same zone. Certainly would make sense that we'd roll over back into that previous area. Even if we do get a little bit of a bounce, I would expect resistance up here at 234.50. That also correlates pretty closely with the 200 SMA here on the 1-hour chart. RSI on both charts looks weak. MACD on the 4-hour looks weak. MACD on the 1-hour looks like there might be a small bounce, and then we would get the bigger rollover. So keep an eye on that. Transports maybe look to bounce, but overall still looking at downside potential. Moving over to consumer discretionary and consumer staples here. So they both sold off, which is interesting. Discretionary looking to retest that 144 EMA and 200 SMA sitting down at 140.70. That would be interesting. Potential for a bounce there. That would also be a potential double bottom. Overall, still looks like it's heading in that direction. It's below all the other EMAs as well as VWAP, so looks weak. Similar on consumer staples. Very weak day today, but still within this normal trading range that we've been in. We're testing the lows going back to January 19th. So overall looks a little bit stronger than discretionary, but not by much. Both MACDs looking at downside potential. RSI on discretionary looks a little bit weaker than staples, which does make sense. Moving over to semiconductors here. Not a ton to add. Basically, they sold off with everything else, but it's still in this previous consolidation zone. They've been very strong here recently. You can see we're at that previous trend line. Hourly showing a break below, but 4 hours showing that we're still sitting just on that point. Certainly could look to bounce from here. That would be interesting. But if we do get a break, then you're looking at this next lower trend line, currently sitting at around 234.70. So keep an eye on this one. Overall, semis have been propping up the markets, but they do look weak here at the end of the session. Moving over to yields here just for a moment, you can see 2-year yield breaking out, making new highs, tag that 5 level for just a moment. Looks like it might slip below it here at the end of the session, but looks very strong here today. 10-year yield threw some wicks to the upside, but continues to trade within this zone. I think the 10-year is probably going to be pretty stable in this area. And once we start to see talks of cuts coming in, probably at the end of the year for next year, then we'll probably see this 2-year yield start to roll back over here. But right now, we just continue to see potential upside in the 2-year because we see a higher terminal rate from the Fed. They continue to talk about more hikes, and now we're talking about 50 basis points here in March, which is going to continue to drive this 2-year yield higher and higher as we continue to move that interest rate goalpost further and further away. Moving over to the dollar on the 4-hour and the daily chart. Man, I continue to be pretty close to on par here with the dollar, so I expected that we were going to get that sell-off after the wicks that we threw here, find some support. I actually thought we would go a little bit lower, retesting the 144 EMA here on the 4-hour chart. Didn't quite make it that far, but we did test the 21 EMA here on the daily chart. Wicked it just barely, marking a double bottom. And then with the testimony here today, the dollar went much, much higher here. And looking at this trend line that we had been watching previously, we are right at the top here. Certainly could overthrow this. Have to be looking at the 200 and 140 SMA and 144 EMA here on the daily chart as your potential price targets. Probably won't go there in one straight shot. Might bounce around between these support and resistance lines, but over the medium term, I would expect to get back into this previous zone. Zooming out here on the daily chart just to see where that puts us. That's the highs going back to mid-August of last year. Does make sense. As well as the lows going back to the end of August, beginning of September here. So definitely a strong level. Certainly looks like we're going to gravitate into that zone. And then we'll have to see what kind of interactions we have at that point and what kind of economic reports we've gotten. Certainly could take the rest of March to get there, depending on what we see out of the Fed meeting on the 21st and 22nd. Moving over to high yields on JNK. This is starting to look a bit like a bear flag here. So we came in from the top, chopped around here on a slightly rising trend. And if we do break out to the downside here, that's going to be extremely weak and very interesting here. So keep an eye on this. Certainly some areas where we could find some support. If we don't find support and this breaks out to the downside, that's going to be very bearish for equities and growth. So keep an eye on JNK. Still looks fairly stable. Certainly could bounce from here. But watching this lower trend line here at 90.50, that breaks, we're going to be in some trouble, in my opinion. Moving over to TLT just for a moment. Not much to add here, continues to bounce in this range. Tested VWAP here just for a moment, got rejected on the daily chart, back into this range, slightly higher than the previous day's close, so overall slightly bullish. Seems like people think that the 20-year yield is going to be fairly stable. Obviously, it's hard to predict 20 years from now, but it does seem to make sense, 2-year going higher. However, in the longer term, people think we're going to be generally okay. Moving over to the VIX to finish up with the charts here today, you can see we basically did what I thought we were going to do. So we got a bounce, rallied back into the middle of this range that we had been watching, retested the 21 EMA. I think I said we were going to test the 144 EMA here on the 4-hour chart. Didn't quite get that high, but I would suspect that we'll get there tomorrow. Probably looking to retest the upper range here at around 2040. That would retest the previous low going back to February 28th and early on March 1st. So overall, bullish on volatility and probably going to find resistance back at the 200 SMA here on the 4-hour chart. Indicators, bullish on RSI, 1 hour bullish on RSI, slight slump here on the hourly chart. Maybe we get a slight retrace and then the continuation back up into that previous range. But overall, you should expect the VIX to go higher in the short term. So looking at my accounts, I actually did fairly well considering how down the markets were. The NASDAQ was down more than 1%. IWM down more than 1% as well. I lost about 0.1%. Helps make up for some of my losses yesterday. I lost around 1% yesterday, which is not great. So overall, we're basically even with the markets on the week. Played a lot of defense here on my IWM position and did roll this call down to 187. You can see I've lost $215 on this position and an open loss here of $345. But my P&L on the day and my Roth account was only $68 here to the downside. And that's thanks to these covered calls help protecting me to the downside. If we do get a little bit of a rally, that would be nice. Otherwise, looking at the Qs, I did start to re-enter into some put positions based on the down moves, which were pretty significant. I picked up one here for 2 days from now for $1. That was a little bit early in the session. Probably a little premature there, but not too bad, only down $12 on that position. And then I picked up another one here at $2.94 for 63 cents. So basically looking to get back in around $2.93 here on this later position and $2.93.40 here on this position expiring tomorrow. Overall, not too bad, but definitely could have done better. There were some pretty good opportunities that I did not maximize. And my thesis for tomorrow, like I said, probably a small bounce, but overall still expecting bearish prices going into the end of tomorrow's session. Obviously, keep an eye on Jerome Powell talking to the House. He might say some new things that we don't know, but I don't really think that's going to be the case. Let me know down in the comment section what you thought of Jerome Powell's testimony. Is he getting a little bit hawkish because markets were a little bit frothy? Or is he just really concerned about inflation and he thinks it's going to continue to stick around even longer than expected? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.